Okay, now we shall go ahead and take on an example on accounting standard number 9 on revenue recognition. So read the question for us. This is an example from May 2015 CA final examination, and now very well, okay, they can ask in CA Inter. A similar sum came in July 2021 exam as well in CA Inter. Fine?
Yes, sir.
Yes, ma, read the question for us.
A company sells the goods with right to return.
You saw it's a right to return. It's not sale on approval. It's a right to return. Then
The following pattern has been observed. Time frame for return from date of purchase and percentage of cumulative sales value is given.
okay.
Within 10 days, 5% of cumulative sales.
So 10 days from the date of purchase, there is a chance, or there is 5% of the goods will be returned based on your past experience. You know that 5% of the goods are returned by the customer within 10 days. Then what about 11 to 20?
7%.
7%, and 21 to 30 days.
8%.
8%, and 31 to
45 days.
45 days.
9%.
9%. Next.
The company has made sale of 30 lakh rupees in the month of February 2015 and rupees 36 lakh in the month of March 2015.
So your company sold rupees 36 lakh worth of goods in the month of March and rupees 30 lakh in the month of Feb, right? They given the sales for the month of March and Feb.
The total sales for the financial year have been 450 lakh and the cost of sales was 360 lakh.
Please remember 450 lakh will include this 30 lakh and 36 lakh sold in the last
Year.
2 months, last 2 months of that year. And 450 lakh includes rupees 30 lakh and 36 lakh. And 450 lakh is a sales value. And what is the cost of sales? 360 lakh. And you all should know by now sales minus cost of sales. What is it called?
G.
It is called GP. Stands for gross profit. And what is a GP ratio? It is a 90 lakh. That is 450 lakh minus 360 lakh, right? 90 lakh is the amount of gross profit. Now, what is a GP ratio? Divide a 90 lakh by
450 lakh.
450 lakh into 100. And as we speak, guys, do some mental accounting or just take a calculator, right?
Yeah.
Work it out. It will be 20% is a profit margin made by your company. Is that fine?
Yes, sir.
Next.
Determine the amount of provision to be made and revenue to be recognized in accordance with AS 9. A year may be considered as 360 days.
So why you should make a provision? Because there is a chance of customers returning the goods the next 45 days, right? Example, suppose the goods were sold sometime in March, let's say on 30th March, for example, okay? The goods can be returned in the next 10 days in April, another 10 days in April, that is all in the next year, right? The next 45 days, the goods may be returned by the customers. Because the customers have the right to return the goods. Maybe you're running a retail store where you tell the customers, you make a promise, you tell them very clearly, if they're not happy or satisfied with the product, they may return the goods. It's not sale on approval, it's a right to return. We'll ask you, why not 45 days to 60 days, 46 to 60? That is not there because your past experience shows that goods beyond 45 days, no returns happen, right?
Yes, sir.
So now, please refer to before you can start. And one more thing, they're given 360 days in a year assumed. That means you can say based on the data given, it is 30 days each month. Got it?
Yes, sir.
360 days by 12, 30 days a month. And here we're going to assume that, very weird, okay? We're going to assume even Feb has how many days? 30 days. Is that clear?
Yes, sir.
Now please refer to the boxes out there on the screen. You'll understand, then you understand the solution better. Now just see, I'll put right at the bottom, That is March 21st to
30.
March 30th. You would have sold rupees 12 lakh worth of goods. How I got 12 lakh? 36 lakh is a sales across 30 days in March. Now, what is the average sales for a block of 10 days? 21 to 30, it is around 12 lakh, right?
Yes, sir.
And 21 to, or rather 11 to 20, that's March 11 to March 20th, another 12 lakh. March 1st to March 10th, it is 12 lakh. And then what about 15th or 16th of Feb to 30th Feb? Sounds weird, okay?
Yeah.
It's going to be 30 lakh divided by 2. Because 30 days, it is 30 lakh. What is for 15 days?
Yes.
It's going to be 15 lakh rupees. These are the sales made. Now you might wonder, why did I make these boxes? I'll tell you. Now what happens, just see the question once again. Go to the question, Renuka.
Yes, sir.
They are given that sales returns are happening between, what are the columns given? The days
And the cumulative.
and the percentage of cumulative sales. What are the columns? To just read the columns.
In the solution, sir.
And the question.
Question, the time frame of return from date of purchase and percentage of cumulative.
The time frame from the date of purchase and the percentage of cumulative sales. Now, what does it mean? You know, when this sum came in 2015 examination, CA final, people had no clue. Okay,
Yes.
they were in total mess. No one understood the question. What they meant was, the goods are sold between 21st March and 30th March. So you can assume that all goods were sold on 30th March. Let's assume that, okay? That is the assumption you make. If all the goods were sold to your customers on 30th March, right? That means all the rupees, the 12 lakh rupees worth of goods may be returned in the next 10 days in April. Got it?
Yes, sir.
That is next financial year. Just say I would have drawn a line, next financial year. Would have been from 1st April to 10th April, or 11 to 20, or 21 to 30, or also 15 days in May, right?
Yes.
So the customers might return the goods. Therefore, this 12 lakh rupees is sales made in the last 10 days of March, right? So those goods may be returned in the next 45 days. It's all in the next financial year. Got it? Now I'll go to the previous box. What is it? March 11th to March 20th. Got it? The rupees 12 lakh worth of goods sold between March 11th and March 20th. Those goods may be, let's assume that all goods were sold on March 20th. Okay? I'm going very slow. So 20th I sold all the goods, 12 lakh. Those goods may be returned by 30th March. That's not an issue if it is returned. Nothing is gone. That means no returns happen till 30th March. But those goods may be returned in April, yes or no? Between 11th and 20th day, or 21st and 30th day, or 31 to 45 days, right? Therefore, what happens? The rupees 12 lakh worth of goods, what is sold between March 11th and March 20th, may be returned in April, that is, which is the 21st, not the first 10 days, 11th day onward till 45 days. Got it? Now, what I will do, point to note. Now, why they gave percentage of cumulative sales? Because when I calculate the percentage returns for the next year, what I will do, I'll take the sales made between 11th and 20th of March. How much, ma? 12 lakh. That plus, I will take even the March 21 to 30. What is the reason? Even those goods will come in the next financial year. Basically, I am more bothered about what percentage of sales will be returned by the customers in the next financial year. Got it? So for that, I am supposed to make a provision. So where is it given in the side I should make a provision? Please remember, AS9 says that Whenever the goods are sold with the right to return, not on approval, right to return, then the standard says that you please recognize the sales in full, no problem, but make a provision for the refund. The amount you want to make a provision for the loss you'll suffer on returning the goods. What is that? You will not make that profit, right? Once the goods are returned by customers, then you don't earn the profit on those goods. Yes or no? So for that, you are supposed to make a provision in your books. Is that clear? Now, just watch this boxes first. Once again, repeat. Between 21st March and 30th March, what is the sales? 12 lakh. And 20, that is March 11 to March 20, how much? 12 lakh.
12 lakh.
And then March 1st to March 10th, another 12 lakh. March 16 to March 3rd, Feb 50, 16 to Feb 30, how much? 15 lakh, right? These are the sales made. Now, when I go through the chart, let's go through the theory first. And when I go through the table, I will once again come and explain these boxes. Is that fine?
Yes, sir.
Yes.
So, accounting treatment for recognition of revenue. Revenue in respect of sale of goods is recognized fully at the time of sale itself. Assume that the company has complied with the conditions stated in AS 9 relating to recognition of revenue in the case of sale of goods.
You know what are conditions? Check whether all the risk and rewards of ownership have been transferred to the buyer, and as a seller, you do not retain any control over those goods, which is very true, right? The minute you want to sell the goods, the minute the goods are going out of your shelf into the customer's hands, you lose control. You can say all the risks and rewards have been transferred. Only thing, you are promised that in case the customers are not happy with the product, they can return the goods. You're giving them the right to return. Is that fine? Yes.
AS 9 also provides that in case of retail sales, offering a guarantee of money back, if not completely satisfied, it may be appropriate to recognize the sale, but to make a suitable provision for returns based on previous experience.
Is that fine?
Therefore, sale of 30 lakh and 36 lakh rupees made in the month of Feb and March will be recognized at full value. Then amount of provision. The goods are sold with a right to return.
Now there is AS 29 coming. Okay.
The existence of such right gives rise to a present obligation on the company as per AS 29 provision, contingent liability and contingent assets.
Because you have a present obligation, you made a promise to the customers, they have what? The right to return the goods. Then you have to return the goods. When they return the goods, you have to refund the money that you have taken. The only thing you will not earn profit on those goods, right? Returned.
Yes.
You get back the inventory, the goods. Yes.
According to the standard, a provision should be created on the balance sheet date.
On the balance sheet means on 30th March in this example.
For sales written after the balance sheet date.
For sales returns that will happen after the balance sheet date. Got it? Next.
At the best estimate of the loss expected, along with an estimated incremental cost that would be necessary to resell the goods expected to be returned.
Therefore, you should be bothered only about the sales returns that will happen after the balance sheet date. Is that fine?
It is assumed that sales have been made evenly throughout the month, and every month is of 30 days based on the information given in the question, that is 360
360 days in a year, so 30 days a month.
So
Now there is a nice table given. Okay, what are the column heads? First column.
Sales during.
Next.
Then sales value rupees in lakhs.
Rupees in lakhs.
Sales value cumulative rupees in lakhs.
Cumulative.
The likely return percentage.
Percentage of goods returned. Then
the likely return rupees in lakhs.
Rupees in lakhs.
And last is the provision at the rate of 20%.
Nothing but you will not earn the profit, right? So you make a provision for unrealized profits. Is that fine?
Yes, sir.
And that is the last column being 20% GP ratio on sales. Now just see the first column. The last 10 days in March is rupees how much?
12 lakh.
That is 36 lakh by 3. That is by 30 days into 10 days, right? 1 by 3. How much? Rupees 12 lakh. Cumulative, no problem, same 12 lakh only. And what is a percentage return? Is given as 5%.
Percentage.
Now, what is 5% on rupees 12 lakh?
It is
0.6 lakh, that is 60,000 rupees. On that, what is 20% GP?
0.12.
0.12 is a profit you will not earn on these goods, right? Now comes a trick. When you take up the previous 10 days, no, that is March 11 to March 20. Got it?
Yes, sir.
What is the sales? Again 12 lakh. But now you add these two and say 24 lakh, because I'll tell you what is the reason. The 12 lakh rupees worth of goods what is sold in March may be returned even on April 11th, right? Which is beyond 10 days.
Yeah.
And what you sold on March 20th may be returned in on April 1st, which is the 11th day, right? Because what is sold on March 20th, till March 30, 10 days, the first 10 days are over. The 11th day onwards will be in the next year, right?
Yes, sir.
For the sales we made on March 20th, the 11th day onwards will be in the next year. So therefore, I include that 12 lakh. In all rupees, 24 lakh will be taken. Got it?
Yes, sir.
And on that, what is the percentage given? It's given as 7%. What is 7% on 24 lakh?
It is 1.68.
1.68 lakh. That is 1 lakh and 68,000.
Yes, sir.
And on that, what is 20%?
0.336.
And that is the amount of provision required for the unrealized profits, right?
Yes, sir.
And next we go to the first 10 days in March. What are the sales? 12 lakh.
12 lakh.
Please remember, for the sales you made in March,
Yes.
that is the first 10, let's say you made sales on 10th March, for those goods, 20 days already would have gone in the same month. Yes or no?
Yes, sir.
Because March 11 to 20 and 21 to 30 gone. That means what? These goods may be returned in the next year, which is basically the 21st day onwards. That is why I include now the 12 lakh. Then you can add up all the three. Which one? The 12 lakh, what you made on, between March 21 to 30, 11 to 20, also 1 to 10. Add all the three. All these goods may be returned in the next financial year, right?
Yes.
That is on the 21st day till the 30th day. What are the percentage returns cumulative? It is 8%.
8%.
So what is 8% on 36 lakh?
It is 2.88.
On this, apply 20% profit. How much you get?
0.576.
And that is your provision for unrealized profits. And then the last one, what is sold in? Let us say on 30th of Feb. Okay? That is between Feb 16 and Feb 30. Assuming you sold the goods on Feb 30, already 30 days are over, right? For those goods.
Yes, sir.
For right to return. The 31st day will be coming in the next year, right?
Yeah.
So therefore, definitely include that also. And apart from that, other three. That is, you take 15 lakh sales for the month of, between Feb 16 and Feb 30. And what is the cumulative? In all, 51 lakh. On that, what is a 9%?
4.590.
Very good. On that, 20%.
0.918.
That's it. Now you should total the last column. That will suffice actually.
1.95.
And don't bother about the 9.75 lakh. You bother about 1.95. That is a profit you will not realize. So you got to make a provision for that. The entry will be profit and loss account debit to provision for unrealized profits. How much?
1.
It is a 1.95 lakh you will not earn. So make a provision for rupees 1.95 lakh, and maybe you can make further provision in case you have to incur some cost to resell the goods returned. What if the goods are returned damaged condition, right? Then you have to repack them and sell. So make a provision for that also if necessary. Is that fine?
Yes, sir.
Yes, ma.
So that is 1.95.
1.95.
Then
Therefore,
20% working note they've done.
There's a note for 20%.
The gross profit.
That's it. Therefore, you should make a provision for rupees 1.95 95 lakh in your books. Is that clear?
Yes, sir.
So guys, please go through, in case you don't follow, go through second time, third time, okay? And these boxes are quite, handy to understand. Go, just show the boxes once again. I will reiterate on this point and end the video, okay? Just say the sales are between March 21st and March 30th. Rupees 12 lakh worth of goods are sold. These goods will be returned in the next 10 days or 11 to 20, 21 to 30 or 31 to 40. All these days are in the next financial year. Is that fine?
Yes, sir.
But for the goods sold between March 11th and March 20th, for those goods, they will be returned in the next year, means only it will come start from the 11th day onwards, right? 10 days, let's say the goods are sold on March 20th. That 10 days will be over by March 30. That's not a problem. Only when these goods are returned on the 11th day, it will come in the next year, 11th day onwards, till the 45th day, right? That's why I include that 12 lakh plus the 12 lakh sold in the last 10 days of March. And what about the sales made in the first 10 days of March? The first 20 days not an issue. Why? In the current year. Only what is returned in the next financial year, right?
Yes.
For the sales you made on March 1 to March 10, let's say March 10th you sold the goods, the 21st day will come in the next year, 21st day onwards. That's why I include the 12 lakh, okay, to calculate the percentage of provision.
Yes, sir.
And finally, Feb 16 to Feb 30. That's another weird assumption, 30 days in Feb. Okay, guys? So, very important example, a very similar sum came in July 21 exam as well. Go through this example really well. Bye-bye.